Now, Tom Piotrowski is live with us. How are we looking today, Thomas?
Pete, good morning. We're going to kick off with a modest improvement. Nothing to mention in letters home, up by around 0.2%. We finished flat yesterday, so just in negative territory. So an absence of momentum at the moment. It's a question of whether or not we can summon some today. But in terms of what happened in the Northern Hemisphere, I suppose the point to make, Pete, is that both in Europe and the United States, we saw quite significant moves higher for long and short-term interest rates for a variety of reasons, be it better economic news. We saw a better growth outcome in the US in terms of the economy. The economy expanded at a 2% annualised clip in the March quarter. That was higher than expected. We've had Jerome Powell running around talking about the need for more rate rises. He's on a bit of a I suppose a European sabbatical at the moment, talking up interest rates, which was a factor pushing bond yields higher. And then we also saw some better figures on the employment side of things, which saw 2- and 10-year Treasury notes up by about 12 basis points last night. That's a pretty significant move higher. Nonetheless, stocks actually held up quite well. The S&P 500 up by 0.5%. And the technology stocks, which would normally be pressured by that, they were actually flat on the day. So that wasn't a bad outcome. So it's a question of where the momentum comes from today. We don't have anything meaningful in terms of economic news today that's going to shift sentiment. Chinese manufacturing numbers could bring that today, so that's worth looking at. The Chinese economy is at a low ebb at the moment, so that might bring to the fore that conversation around more stimulus being applied to the Chinese economy.